Alright guys, welcome back to another video. Hope you guys had a safe and a great holiday, a great New Year's, and ready to get after it in 2026, right? This is going to be the year that you turn things around in your life and you start making some real impacts in your life. So I hope everybody is having a blessed day and a great New Year's. Hope y'all stay safe and all that stuff. So basically I'm just going to be going over the new trade that I'm in and kind of just the overall week, just kind of a recap, going over some of the stocks that we were looking at on the Sunday scan that we didn't end up getting into, but going to be going over how you could have entered some of these trades just based off the weekly watch list that you could have taken from, you know, some of the posts that we made in Discord, and some of the charts that you could have looked at and made analysis and take your own trades on. And I could just give you some ideas on how you could have taken your own trades in some of these without some of our, alerts that we post in there. So first thing, I'm gonna go over the LUNR trade that we took today for a swing, right? We took this trade twice. We made about 20% or like 17-18% the first trade. Ended up taking half off and then taking the rest off at break even. So basically it was a risk-free trade. Pretty much, right, my rules are once a trade gets to 15-20% and you take your first trends, you move your stop loss to break even, just to basically keep that trade at a risk-free, to keep it a risk-free trade. So you're basically not losing anything at that trade if it comes back down to break even. Sometimes it depends on the market, but the markets that we're in currently, until it proves otherwise, I want to keep my stop losses pretty tight and basically trimming a lot sooner than what I would normally do, right? I normally like to target for 30% or 25-30% before taking any trends, but we have not really seen any big momentum plays here over the last few months, so we want to take profits a lot quicker than usual, right? So that was what happened today. We took a nice 18% and we put our stop loss at break even on the remaining contracts, and we end up taking it again later in the day, and this is all alerted basically in real time. I was not on the charts at home, so I was a little delayed on the alerts, but I tried to get it as quick as possible sent in there. So that is what I'm going to be going over here real quick. So basically what I really like about LUNR, right, Intuitive Machines, this is a really strong stock that has been one of the strongest stocks in the market over the last few weeks, right? Markets have been super choppy and kind of selling off a little bit over the last few weeks, while this has just completely not made a dent in its price at all, right? We made a big move here on some nice volume a couple weeks ago, huge moves, right? We made about so we moved up around 50% in about a couple days, and basically since then has just been consolidating and moving completely sideways, letting the moving averages catch up. And you can see today making a nice hammer right off this 9 EMA here with a nice little volume here as well. So this is something that we are looking at swinging and hoping that we can target, right? Our targets on this trade are going to be around, I'm going to look up here back from February this year. So a long time ago, almost a year ago, right? I'm going to be targeting obviously 1821, which you can see it's almost at that spot here, but I'm maybe looking at targeting kind of higher than that. So I'm going to look at 1821. I'm going to look at 19.5. I remember like 19.5 I liked. So 19.5, you can see this is some key level here back in February and early January. And then obviously I'm gonna be targeting that $20 level, psychological, right? We always target those psychological levels. And then we're gonna be looking at a bigger picture here. That's not what I wanted. We're gonna be looking at the bigger picture here. I'm gonna look at 22 and potentially 24.71, so 25 near. So this is a huge target points that we're looking at in this trade. So this is basically gonna be hoping for a multi-month or multi-week trade, right? I'm gonna be wanting to hold this for multiple weeks potentially, right? This can be a huge trade. So that's what I'm looking at on the targets. And I'm gonna just go over my entry here as well. So those are my targets. I'm gonna take those off here, and then where we entered this on and why I entered it. You can even say this is kind of just a continuation, right off the 9 EMA. There's no really complete setup right now, or like a bull flag or a wedge or anything like that. You can kind of maybe say this was a flag break as well, like off the 9 EMA, but I didn't really consider that. I just kind of consider this a strength play, considering how strong this stock is. I'm just playing it off the 90 MA and watching how the volume is, you know, picking up right at that moving averages and respecting it and continuing this trend up, right? So we marked off 17 as our entry point here, just because that's a psychological level. And you can see this is a pretty key level here, pretty big key level, with it rejecting multiple times here at that 17 spot. So if we go down and drop to the 15-minute, this is where I entered the trade at. You can see, right, the 15-minute chart, we had some nice volume kick in here right around that 17 spot. You can see that second 15-minute candle with some heavy volume, right? Almost basically the identical size volume from that first 15-minute. Nice big green candle over that $17 spot. We didn't take it around there. We waited for it to retrace and make a little pullback, and we wanted to see how it reacted off this nice pullback here. Basically, right, you don't want to take this off a big reaction like that, right? The big green candle, people chase, like, you know, people can chase that move here, you know, when it gets up to that, you know, through that $17 spot, and basically catch a nice, or catch a kind of a nice, or not a nice L. I wouldn't say nice L, but it's not a nice L. If you take this and chase it, you end up chasing it up here and it retraces down, and you're losing 20, 30, 40% already, and it's basically just taking an early entry, and they're basically catching you, you know, trying to, you know, take it late, stop you out, and then continue this price up. So we don't want to take it here. We wait for it to retrace and get another better setup here. So we didn't take it off that first 15-minute, and I entered these around 10:30. So right around these two candles here, so 10:15, 10:30. So I entered on this candle here, and you can see why, right? We did start flagging. We had the moving averages catch up. So with that first 15-minute, we did get extended from the 90 MA, or just all the EMAs in general, right? We got extended. We didn't want to chase that. We wait for it to set back up. We waited another, you know, hour until this started setting up again. You can see the next 15-minute, right? Once we retraced for that next 30 minutes, we make a big push again over that $17 level. We started, and you can kind of just draw a nice little flag here that we took, that we noticed here. I took it on this candle here, so we got a nice push over the next hour. That's where we took our profits here on 20%. Not a big move necessarily, right? We did take 20% and then ended up kind of coming down here, and it looked like it was trying to not sell off, but like kind of push back into the range. So we did take that the break-even stops on the rest, just to protect us from going into the red on this trade, since we already took profits at 20%. So then where I re-entered was when it started to reclaim back on the 90 MA. You can see, right, we pushed under the 90 MA and then quickly reclaimed it. That's why I ended up re-entering this, because it looked like at that point it wanted to close pretty nicely here. At this point, it didn't have a nice little daily candle closed. If it was to close at this point, obviously we had more time in the market, so we just wanted to see how it was going to keep moving the rest of the day. And ended up reclaiming it, and it ended up looking like it was going to close pretty good and pretty bullish. So that's why I ended up re-entering it, and that's why it's so good to make sure you just keep your risk tight in some, you know, at certain points in the market, because you can always re-enter a trade if you end up, you know, selling for just a break even. So ended up taking it again. So now we're still in the trade. I haven't trimmed at all in the second trade, so we're just going to end up waiting for our targets to hit. And obviously we're looking at 18.5 and then so on and so forth. But that's where we entered the trade at, right? A nice entry on that first one, nice trims, and then a nice re-entry. So that's LUNR for you. And then also another stock that we were watching that I posted today was RKLB, which looked super nice. Another stock that's been super strong over the last few weeks, while the markets are basically choppy and not really making any moves higher. It's basically just trending down. This has been one of the best stocks to be in, right? Just insanely strong, similar to ASTS on that trade that we took that we made 180% on. This is similar to that setup, and it's just super nice, right? We're basically ripping, making nice moves to the upside, letting the moving averages catch up, and now we're basically again having a lot of buying volume right off the 90 MA. This one was a little bit cleaner too than LUNR, which would have been, this is probably the better entry. This would have been a better trade for me to take based off my entry model, but still, regardless, the other one was still good. I'm not saying the other one was not good, but this one would have been a better entry, or a better stock to get in, just based off what I like to see, which is basically like flags and wedges and stuff like that. So let me show you where you could have entered at. So we're watching this around 73. So this was basically that support from back in December 22nd. We had that resistance here around on Monday, and then another resistance point here on Wednesday. So big key level here at 72.6. So this could have been a nice entry here. You can see we broke out. If we look at the 15, I would have liked to take this off the 15 in the middle of the day. You can see we pushed over 73. You don't chase it since it gets extended from the moving averages. You let it come back, retest, and set up again. And this would have been a great entry right around here as it started to hold up on the moving averages as it came down to them. And you would have taken it, put in your stop loss, you know, basically either back in the range or maybe down here. Typically, we want to put our stop loss at below day, but that would have been too big of a risk, right? That stop loss would have been pretty big. So you would have just put your stop loss back in the range, or even kept it tight and put it, you know, right around this candle here, right? This candle low here, you could have taken your stop loss at and ended up, you know, swinging these, because this thing absolutely ripped from that spot. And there would have been no point of even stopping out at all, right? These end up ripping. So this would have been a nice trade to get into, and it looks super nice on the daily chart too. So this would be something that we're targeting, you know, the top of this range here around 70, you know, 79, 80, and then from there just basically high, all-time highs. So you should be targeting 85, 90, 95, and 100. That would have been a nice one. And then there's a few others I think that were looking really nice. And then obviously, let me go back and show you where my stop loss would have been on this. I put a tight stop on it just because you know, obviously we're pretty high from the low of day. So my low of day, my stop loss would not have been low of day at all, because it would have been that would have been a super big loss. So if I entered it around here, I mean, stop loss is way, the low of day is way down there. So that would have been too big of a risk to do that. So it would have been, I think my stop loss I put at this low candle here on this retest from the first, basically that 15-minute breakout and low that we printed on that retest. So that would have been my low day, or my stop loss there. And then we're basically just targeting way up here, like the same targets that we're looking at. There's a few other trades that looked really good from the watch list. I think I was watching A-Lab. This looks really good. This is a little bit, I don't know, a little bit shaky. I don't think that was a good one. Pawn W ended up playing out really nicely to the downside. Right, we're watching this under 183. I posted this in the charts analysis page, which was from last night, and it ended up, you know, getting right under 183. You could have taken this for a short. This is basically following what the market was doing today, because the market did sell off from the gap up today. So this would have been great right under 183, right? Get that first 15-minute break. It holds it. We take it off. You could have taken off the retest here on the 5-minute, or just waited for it to break and retest the moving average. You can see it basically retested that 90 MA, and that would have been a great short there. That would have been good. And you would have been obviously targeting down here at 180, so that would have already hit your first target and maybe your second target as well. What else played out? This one looks like it's playing out as well. UMAC. This is another one kind of similar to LUNR, right? Machinery stocks. And this one's actually breaking out here. This would have been the entry around 13.5. So this would barely be hitting your entry right now at this point. Reddit, another one that's actually looking really nice that I posted last night. Breaking out a huge base here, huge setup. This could be a multi-day, multi-week continuation on Reddit. And then I think the big one that played out from Sunday was BIDU. This is a China stock. I told you that I don't really like trading China just because there's a lot of gaps that happen overnight. And you can see, I mean, just basically every day is a gap up or a gap down. But this ended up, you know, literally ripping in 3 days, up around 20% in 3 days. This would have been the biggest play of the year for me, potentially, if I would have taken this. Definitely the biggest play of the last few months. But this ended up being really nice. I was watching this after it broke out from, I think, Friday or on Monday. I was watching this for a retest of 125 since we broke out on Friday or on Monday, and I didn't enter it. I was hoping that we got a retest of this breakout spot, but we never did. We get that huge gap up, and this would have ended up, obviously paying. I'll show you the targets if you were just taking it on Monday. So obviously I'll be targeting this candle here around 128. I would have targeted this higher here, right, from back in November. And then obviously the big target would be the top of this range here around 145. So you can see clearly just broken out of all 3 of these targets, and almost at the final, or it would have been actually 150 would have been that 4th take profit point here. So you'd be at basically the 4th take profit here, and this would be a huge trade so far. So unfortunately didn't take that, but looked good. Let's see if we could have entered this on Monday. So the entry would have been on Monday on this breakout here. So this would have been like an end of day kind of ad. You can see it didn't really break out until the end of the day here, and it had some nice volume on that breakout here. So this would have been a great entry and nice, and yeah, nice play. So those are the trades from this week. That really the only trades that I saw that actually played out. Other than that, there's not that many setups that were happening this week. Very short week and low volume kind of. Besides today, there's a lot of low volume. Obviously, with a day off on Thursday, and then that Christmas. No, not Christmas this week. What was this week? Oh, the New Year's Eve. So New Year's Eve, not a lot of people trade, and obviously the day off on New Year's Day. So that was the week for you. Hope you learned a little bit of something, and we'll be back next week to get the full trading week finally under our belt for 2026, and then we'll start off with some bangers for the rest of the year for you guys. Hope you guys enjoy your New Year's, and let's get after it.